Going forward, what are the plans for HDFC Bank? Because at the time you acquired CBOP and you made the announcement, which was April 2008, you said that until we digest this acquisition, we're not going to look at anything. It's been 4 years, more than 4 years since. Is it time that you believe that you need to do something more to increase your footprint, or do you believe that the non-acquisitive approach works well for you?
Let me put it differently. If you look in the last 3 years, we've gone from approximately 700 branches to close to 3,000 branches. So you can see the difference in the footprint. So that's a very large footprint, and we continue to open branches. We have also introduced what we call mobile branches, where a guy goes on a motorcycle and he just literally assembles a branch and is serving a village for 2 hours in the day. We have taken our products into the interior. So if you see a large proportion of our products, they are catering to the semi-urban and rural areas. So when people say, you know, you're an elite bank or you're not doing what the nationalized banks are doing, I disagree strongly. Because if you go into the interior, what do they need? They need a motorcycle, they need a light commercial vehicle, they need a tractor, they may need loan against gold jewelry, they need loans against their crops, they may need a credit card. And who provides all of this? HDFC Bank in the interior over the last 4 years. That part of our business, where 70% of India lives and only probably 50% are accessing services from organized finance, is an opportunity into infinity as far as HDFC Bank is concerned. But we have changed. To do this, we had to change our processing. So we had centralized processing and distributed servicing, but now that distributed servicing ensures that communication is faster through scanning so that we can maintain the turnaround time. We've changed our credit models. We've changed our collection models. We've changed our sales models. And all of this has been happening over the last 3 to 4 years. And we meet our priority sector norms. Today, we don't think priority sector is an imposition, because a large portion of unbanked India is an opportunity for us. So going forward, we actually think we have put in the factory. We just have to put products through it. We have substantially improved our service quality in terms of being able to faster turnaround, much easier accessibility, far less errors, because a lot more people are dealing with us on the mobile and the net. And we think between a gain in market share and the growth in the economy, we don't have a problem really.
Now, today you are a large bank. You are a globally recognized Indian brand, but you continue to stay invested on the India story. And 2 weeks back at the ET Awards function also, you said that this is the story that we want to grow with.
Yeah.
Why is it that you've not looked at overseas markets to grow?
Because, you know, we can beat ourselves up, but we're probably the only country other than China that has a reasonable growth rate. The rest of the world is going through very substantial problems. I believe the people who create the problem should sort them for themselves. And I do believe India is a great opportunity. And I also believe that the global banks will have to reassess their own models, because once you have strong local banks, then to operate in a local market, you either have to be a niche player or you have to put in very big money to become a major player there. So we at the moment are restricting ourselves overseas to where the Indians are. Our NRI offering is fantastic. It's been growing at 100% because we've got a complete offering. We're also intermediating in trade. But is foreign overseas banking going to be a major, and we've got a great opportunity here. A combination of this, would in the next 3 years overseas banking be a major thrust for us? No.
Right now your capital adequacy is at a comfortable position, but given the rate at which you are growing, how soon do you believe it's going to be before you need to go out to market and raise money?
Well, at least 2 to 3 years. And that's not focusing in that at some point RBI will impose the same standards as Basel III on risk weights and capital adequacy. Then it could be longer.
All right, Mr. Puri, thanks very much.
Pleasure.